Hi, welcome to this video day, which is on the 25th of October. It's Friday. We're just going to be looking at a simple way of incorporating support and resistance in your trading strategy to get you really high odds trades. Now, in terms of what we're going to be looking for today in this video is a really key level of support or resistance. In this case, it's support. We're going to look for that level to hold. It must be a strong technical level, and also you must do a simple study of sentiment to back up your technical view. Once you've got the sentiment lining up with the technicals, you have the potential for a really good risk reward trade. You just look for minimal confirmation that that level is going to hold. So use a very aggressive entry and then you can go in. Now, in terms of this strategy, we use it in swing trading, we use it in long-term trend following trades. Just a great way of getting in with good odds of success. Now, in terms of the two pairs I'm going to look at today in relation to the strategy, they are going to be two lesser looked at pairs, but you probably got them on your trading platform. They are USD CZK, USD Czech krona, which I did look at in a video the other day. I'm just going to update my view, and also the USD against the PLN, or the Polish zloty. Now, in terms of these pairs, so we looked at them in videos over the last few months. We've got great uptrends in the USD against both the CZK and the PLN. Then we got stopped out. The US dollar has had a significant correction. It's come near a key level of support, and now we are probing the long side. Look, really good trade setups to us. You can obviously make up your own mind. We're going to go through the techniques and look at the charts now, but just before we do so, please do keep in mind it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including our exact entries, stops and targets, you can click on the link beneath this video and you will get live access to our member center. Right, the trade setup we're going to look at first is USD CZK. Right, USD CZK daily chart. And in terms of at the top here, I do it with every trade I do. I always work out the percentage change to my target, because obviously volatility varies between pairs. This is quite a nice volatile pair, and if we get to first target chart highs, which I'm hoping will happen pretty quickly, 3.4% change with no leverage. Second target 2650, that's the monthly resistance level, 15% no leverage. So you only need 2 or 3 to 1 leverage and you've got yourself really great reward, obviously, if the analysis here proves to be correct, which obviously I hope it does. Now, in terms of a video the other day I did on USD CZK, I also did USD SCK and USD SGD, which I really like as well, looking at it from a swing trading perspective, but hoping we're going to basically be able to convert this to a trend following trade. Now, in terms of the key technical levels, I'll go through them in a moment, but in terms of the sentiment behind the chart, we need to look at that to see if our key level is probably going to hold. Okay, and it's the sentiment and fundamentals same for both pairs. So just go through these points. Both currencies are euro proxies. They tend to move quicker to the upside when the euro is moving strongly to the upside, or they move more strongly to the downside when the euro is really going down. Now, we think the euro is probably topped out, going down. We expect these pairs to go down quicker. Not pairs, sorry, CZK and the PLN. If you trade Euro USD, you should consider trading proxies, because you get smoother trends, very often better profit potential. You don't have all the spiky price action or noise you get in Euro USD. You get that because there's so many speculators involved, and of course there's a lot of institutions hunting stops. They don't tend to bother with the Euro proxies. There's more feeding for them, say, in the majors. So I like trading the proxies and tend to trade them over Euro USD. So Euro USD, if I'm bearish, I'll normally trade proxies. So point number 2, good news is in the price for USD, for the CZK and the PLN, they're both severely overvalued historically. And most of the fall down recently, we see a nice big fall here, is due to markets seeing interest rates being cut by the Fed. That comes up next week. Market expectations are for a quarter-point rate cut next Wednesday. They're really high, odds of 93.5%. You just can go and look at the FedWatch tool by the CME to see that. So the market has sold the USD down, and now they're almost universally of the view that the Fed are going to cut rates. But is a cut guaranteed? No, it's not guaranteed, really. If you look at what I would consider sensible analysis, Goldman Sachs are saying no, they'll probably hold. And I like this quote, which comes from another institution, which is Grant Thornton. My sense is that we will still face a 60% chance that the Fed holds the line on rate cuts at its meeting next week. That could disappoint financial markets, could be managed by pledging to stay flexible on rate cuts going forward. They could well do that. They don't need to cut rates, really. If they do this, flexible going forward, too many people have sold on the view that they're going to cut. So you're going to see the US dollar rise. And I think as we move into the Fed, a lot of these speculators who've sold aggressively here and in USD PLN are going to come out. Now, in terms of this nice aggressive sell-off, we were trying to get back in long. We did a long trade from back here, nice one. Got stopped out and then she tumbles, okay? Saying in our last video, whenever we see a move outside of the outer Bollinger Bands on high volatility, we're looking to trade back within, okay? You don't tend to stay outside of outer Bollinger Bands for long, on high volatility, okay? Even on lower volatility, you don't. You see here, we come back within, here, we come back within, back within. We're just waiting for it to come back within the outer Bollinger Band and some strength. So we're going to come in above the 23 level. So if you do that, this isn't the major support. You can see what happens. Big red trying to follow through. Blue holds, blue up, puts us long, finishes blue. Spike tail down, can't take out level, finishes blue. And now we're red. The candles have kind of steadied up, haven't they? Now, where's the key level of support? Well, in terms of the key level, it's back here, really. That level is going to take a lot to take it out with so many speculators short, okay? And look at the outer Bollinger Band there as well. I just don't see us getting down through this level. In terms of trajectory, there. Body holds, tail through, body holds, tail pokes, red. Just going up in our view. Got minor support, got major support. That major support level, key institutional level. Too many traders short. Going back to chart highs. And I think if we do get some nice blue to the upside, we'll smash those highs, okay? You can bring the stop in behind this level here, but got to get away from it, probably through that tail there, okay? We'll see how it goes. But I think, after the big fall, we've got the price action steady and with kind of lower volatility. The selling looks exhausted, going up. In terms of identifying the key level, it's just done on the interest rate expectations. Anyone can go and look up the FedWatch tool. It's kind of public information. I like it as a long trade. And I also really like the look of USD PLN. Sorry, I forgot the currency pair. We'll go and take a look at it right now. USD PLN daily charter, fundamental sentiment. I think I said it earlier. Same really backdrop in this pair as USD CZK. We're just doing both, treating it as one trade. Now, in terms of targets, first target chart highs 3.9% with no leverage, slightly better than USD CZK as we see it. Second target 420, 9%, slightly worse. But we're doing both trades. We won't get the best, we won't get the worst. Now, in terms of this pair, got a nice move up from the lows. Really great trend, stopped ourselves out. Then we came in long again. Second trade didn't make us much, and I was looking for it to kind of perk up here, and then look, nice big red candles to the downside. In hindsight, I should have sold it, shouldn't I? But hindsight's a wonderful thing. Now, in terms of what you get, all these reds as the market is looking or selling on the view that the US or Fed will cut rates next Wednesday. And then the selling kind of exhausts and we see the candles steady up. Now, we don't actually go outside of the outer Bollinger Band, really. The volatility is high. This candle here is significant for us. New low and steady blue. Another small candle, steady red. Blue, can't break out. This blue is significant for us. Tail, can't get anywhere near that tail. Blue on the level, just above 385. Triggers us long. This tail can't get down to that tail or even the body. Low volatility, that points to a big move. We think the selling is exhausted. And now we're going to move higher. And yeah, we're literally just at our entry point. So here's the minor support. You can see the bodies, tail, that tail there in the rejection, this tail not getting down to minor support. Could draw trajectory in as well, which obviously comes from the candle tail low. You can see why I've done it. Body, body, tail on the trajectory. Okay. Where's the major support level? Major support level is back here. It's a big level. Okay. You see why. Tried to break up there. This one with the bearish extreme was exhausting. Tried to break through on that blue there. Can't. Blue tries to break through. Can't. Blue, red, can't break through. Blue bashes against the level, get above it, then we're off to the upside. Okay, so from our perspective, this looks a good long. We've got to stop reasonably well back from this level. You don't want to put it right on the level. Okay, I don't know if I said that on the USDC's okay. A little bit back, just in case the level is tested. Now, where are we going? Obviously, we've saying that we should go up to chart highs, which is here, with a possible run on to the upside. So it looks a really good risk reward trade. And that second level, yeah, in both pairs, I think it's going to be very hard to take out because the market has just sold the USD down on the view they're going to be cutting rates next Wednesday. I think it's overdone. I don't think it's guaranteed they're going to cut, and I think the USD is going to rebound. So I like the look of both trade setups. Obviously, when you're doing this, you actually have to identify a big level with sentiment. A lot of traders are kind of nervous about doing that. They think they can't do it. You've seen what I've done. I haven't done anything clever. Just looking at the market perception for US rate cuts and saying, well, is there anything more going to come in to push the USD through second level? It's already tumbled lower on the perception. So rebound is likely. You've got two levels, minor, major. Obviously, if we do start motoring to the upside with nice blue candles or big blue candle, we possibly will bring our stop up behind second level, just like in USD CZK. Obviously, when you're looking at the risk of the reward of the trade, obviously it is as it is now with the risk behind second level. That obviously changes if the trade progresses the way you want. I'm hoping we'll be able to get less risk as we move higher and hopefully get some profit out of it. We shall see. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.